Let's begin with the market. Record closes for the Dow and the S&P 500, led by names like United Health, Caterpillar, and Boeing, but the small caps once again still in the spotlight. Russell 2000 climbing another 3.5%. Let's bring in our market panel. G Squared Private Wealth CIO and CNBC contributor Victoria Green, and Hennon & Walsh Asset Management President and CIO Kevin Mon. Guys, good afternoon. So, Victoria, Russell up 3.5% today. KRE, Regional Bank Index, up, I think, 4.5%. Is this all about rates? Why now, right? We've known for a while that the rates are coming down.
Well, I think there's a couple of factors, but it's just risk on. The junkier you are, the better you're rallying now. And we've been waiting for this. Those small caps, little late to the party, not even fashionably late, but very, very late to this bull market rally. But it's fantastic. They're up 10% or so in the last 5 trading days. Absolutely huge move up. A little more worried about the KRE. Regional banks still have a few hurdles this week with earnings. Did we forget about, the whole CRE potential issue in there? Everything's being swept under the rug because it's rally. Everybody's thrown in on the Trump trade. They're saying this is going to happen. We're going to have lower regulations. We're going to have lower taxes. We're going to have this stimulus. We're going to have rates come down. And suddenly it's everything rally party. And finally, after about, 18 months of lagging almost, finally the Russell 2000 is really, it's a bull market. Maybe I should participate.
I should mention Interactive Brokers results are out. That stock is bouncing around a little bit in overtime. We'll get you the details as soon as we get them all together. And Kevin, you said don't chase market returns in this rally, but what if you're reconsidering your strategy because you thought that small caps were trash? Has the data shifted where you should be thinking?
I think it's a reminder of 2 things, John. One, the importance of diversification, not just to concentrate your portfolio on hypothetically 7 large cap growth technology names. The second thing is to not try and time the market. Now, what we know looking back over the last 31 years is that 95% of the market returns take place on about 1% of the trading days. Today could be one of those days. Now, I don't know when those days are going to be, but I can rest assured if you're not invested in the market on those good days, you're going to miss out on the upside. My fear right now, though, is that investors see that the market was up over 15% during the first 2 quarters of this year, up 26% last year. They think they've missed out on the bull market run, and they're going to come in now when the market is trading at high, go into those concentrated names, and be let down. This is why they need to work with financial advisors to build portfolios, to give them the diversification they need to provide them with upside in the months and years going forward.